So URA just announced the latest first quarter 2024 real estate statistics. What are the numbers? Let's dive straight into it. Hi everyone, this is Pete here. So back to my favorite report in the real estate world in Singapore, and that is none other than the URA quarterly real estate statistics. Okay, so over here, right, URA just released this a long read, but let me just bring you through essentially what are the main points over here. Okay, so the first one is when we look at the residential quarter on quarter, all right, there's a cool down, right, in property prices for private property. So in the Q4 last year, it was 2.8% increase, and this quarter, first quarter of 2024, is only 1.4%. So exactly half of it. Okay, so let's look at the breakdown. You can see across the board, regardless is it landed or non-landed, they both have gone down. But in particular, you can see that there is one shining armor, one shining number, all right, in this quarter, which is the CCR number has stayed relatively stable. So in the last quarter, CCR went up by 3.9%, and this quarter continues its trend at 3.4%. So this is something that I've spoken to my community members before, and I've even made a video about it. So if you want, you can go and watch it over here, right? So I think CCR during the whole COVID period and also the ABSD has caused the prices to be suppressed during the last few years, and I think it is about time that CCR is going to play a bit of catch up to make sure that the disparity between the central area, rest of central region, and outside of central region maintains the same. Okay, now one important thing is when you look at year on year, that means if we look over here at the first quarter of 2023, there is also something to take note of, right? So you can see year on year, last year's first quarter was a fantastic quarter, right? All residential went up by 3.3%, landed went up by almost 6%, non-landed went by 2.6%. And instead of CCR, actually last year at the first quarter was actually RCR that did 4.4%. So you can see Singapore's property actually is quite efficient, quite optimized in a certain way, whereby if a certain sector, for example, RCR and OCR overran in the last couple of years, then right now CCR is going to play that catch up, right, to overcome that period as well. Alright, so another thing is now we can do the update of my favorite chart from the URA quarterly report, and that is the pipeline of supply of private property plus EC by the year of completion. So for those of you who are not aware, this is a chart basically telling you at which year there will be units, right, condominiums that is coming into the market. Now, this does not represent when it is launched. In fact, it is talking about when it TOPs, okay? So, for example, last year in 2023, we saw a bumper crop, right? Over 20,000 units came online. And these are basically units that was launched back in the 2019 or even 2018 because of the COVID delay. So they took a while to deliver, right? So these are all current numbers, not what was launched, okay? So if you look over here, previously I talked about we're going to see a shortage of supply going into 2025 and 2026 because generally our average supply for Singapore is around the 13,000 mark, okay? And this year, 2024, we are already short, right? But the shortage is going to be even lower. That means what this chart is showing you is that in 2025, there are going to be 6,000 new units that's going to be completed, and the owners get the key and they are available for buying and selling in the market, okay? Right? And you can see subsequently it increases gradually to 11,000 by 2027. Then beyond that, right, this is a cumulative number, about 17,000 units beyond 2027. Okay, so this is something that was previously old numbers. Right now they are being renewed. Okay, so what is the renewed number? So I put them side by side, and you can see the main difference over here, right? So let's start by looking at 2025. So you can see in terms of 2025. Right now, they are projecting that number is going to be even lesser. So from 6,700, it's going to drop to 6,300. However, in 2026, actually, they increased it, right, from 8,008 to 9,400 units. And also for 2027, they are increasing it from 11,400 to close to 12,000 units over here, right? So overall, if you look at it, it seems like there are more units coming online. But one thing to take note of is that there is a lowered number for this year in 2024. So this year 2024 original number was 11,700. Right now is 10,500. Although this is talking about quarter 2, quarter 4, but when you look at the URA quarterly report, it does say that this quarter, first quarter, we only had about 241 units, okay, that came online. So even if you take this number plus 241, it doesn't really match up to the 11,000. So what likely happened is that some of the projects here are being delayed and being pushed backward, and it's being pushed backward into the 2026, 2027 timeline. Okay, so this is the new chart. Now, I highly suspect some of these numbers that's being shifted is because there was a project that didn't tender in the end, right? So Marina Garden Crescent, right? This was a sole bid that was not tendered, not given to the developer in the end, even though there was a bidder for it. And this resulted over 700 units that's going to be delayed. Okay, so if you look at the graph right now, okay, this is the old graph. And what I'll do is I'll just put the new graph overlay on it. And you can see that actually the difference is not much, right? The difference is not much. Even if I maintain the same for 2024, right? The rest doesn't change. The only thing that kind of shifted a bit more is in the 2027 and beyond 2027, okay? So once again, why are the numbers not moving much? Isn't the government developing a lot of land, releasing a lot of land? The issue is very simple. It's a matter of timeline, right? In order for these units to increase, they must have been launched actually about 3 years or 4 years ago. So the latest could have changed is actually any units that was launched in 2023, right? So even if I were to buy a unit now, let's say I'm a developer, right? I buy a unit now, I build on it, and I really launch it, right? The earliest I can add to these numbers here is actually in late 27 or even in 2028, okay? Now, the important thing we want to find out is also beyond 2027, right? This 16,000 units, how is it being distributed, okay? So if you see over here, it talks about from Cushman and Wakefield, right? Is a agency that research on Singapore properties. They say that the level of new completion in 25 and 26 is projected to fall to an average of 6,691 units. Okay, so this is lower than 10-year average. Yeah, like I mentioned earlier, about 13,000 units. Okay, so if we move back to the previous graph, where is 6,600? Right, it's somewhere maybe around here, right? Somewhere around here. So this is the average supply across the next 3 to 4 years, which is significantly below. And I suspect that for this number, it is going to continue to decrease as well. Okay, because if you look at, for example, another number that you already given, they say that all the private units, okay, total private units in 2028 is going to be 6,300, right? In fact, beyond 2028, those that are being approved right now is actually only 300, sorry, not 3,000, 304, okay? So this is something that I think the crunch is going to come, right, in terms of the supply as well. So if we go back to here, we look at the graph. If you talk about 2028, if I just do a 2028 here, right, they just now say that it's going to be about 6,000. So another 6,000 here, okay? So likely there's going to be a continued undersupply unless something dramatically happens. Because the demand in Singapore actually is generally quite stable because of our stable population. So the only thing that fluctuates is the supply over here, which is why I've been telling my clients that, hey, you know, although the economic situation is not certain, right? But if you look at the profile of buyers that are buying the condominiums, okay, the income should be quite solid, right? The income should be high because of TDSR. And if you look at right now the supply situation, the only logical deduction that you can have is to say that, hey, very likely the private property prices is going to continue to increase from here. And we did see that this quarter, even though it's lower than last few quarters, it is still an increase of 1.4%. So it didn't drop. It just slowed down in the increase as well. And I do expect that to accelerate once we hit this period of lower supply. When we look over here, the current numbers is not good, but don't be worried. This does not include any units that are still pending approval. So the pending approval ones may increase the number subsequently. Okay. Now, another thing is that right now we are seeing a very healthy sign in the market. So previously in 2023, there was a huge supply of TOP units, okay, that flooded the market and causing the rental market to crash a bit. Okay, not crash, like just drop by a little bit, but the vacancy shot up very quickly. So you can see over here, right, the vacancy in 2023 shot up to almost 10%. In CCR, RCR about 9%, OC about 7.3%. But what we see in this quarter, it was a very quick reversion back to the mean again. Okay, so you can see CCR now is back to the long-term roughly the average, about 8.9%. RCR did really well, go back down all the way to 6.6%. And OCR, right, going back down to 6%. So right now you can see that this supply, like I mentioned in my earlier video, this 20,000 units that was previously here, right, is slowly being digested, right? People are buying it, moving in, or renting out. So this will continue to improve. And once we hit this, I would expect to see the vacancy rate to really drop to a new low level. Okay, we shall see whether that happens. Okay, so next one, I actually take a look at the resale transaction, and you would see that right now, if you look over here, we're looking at the resale transaction over here, right? This current number of 2,683 is actually going to be one of the lowest, right, across the last, I would say, 4 years. Okay, in fact, the total number of units being transacted, right, continues to be lower and lower. The only time that kind of beats that was last year first quarter as well. So this is something that is quite interesting, right? Because as we see prices continue to increase, but we are seeing transaction numbers decreasing accordingly. So this also another sign that tells me that, hey, there's only two things that can possibly happen here. One is there is really no buyer, which cannot be the case because the prices are increasing. That means there are definitely a bit more demand than there is supply, right? But if transaction numbers are dropping, it just means that there is a supply crunch. And I think this is logical because right now when you look at it, interest rate is still high. People are not willing to sell their place and buy a new place and take on the new interest rate if they are already locked into, let's say, a 2-year fix or 3-year fix. So a lot of buyers right now are facing this problem, right? They go to see the unit and they can't find any sellers, or they can't find very willing sellers to sell. There will always be sellers that will ask for outrageous prices, and those are not what you want to go for. And therefore, when I look at my clients, I say, hey, you can look at this property, you can look at that property. The property is good, but right now the issue is that there is not enough supply for people to buy. Okay, so is this a sign of supply crunch in the resale market? Seems like it. We just need to observe a few more quarters to see how it is. So by and large, you can see that the signs are pointing towards that we are seeing a supply both in the new sale segment and also in the resale segment. Okay, how will this impact the property prices in the long run, right? I think it's continue to push the prices higher, although the growth may not be as crazy as previously post-COVID. But I think given that the GDP is good, interest rate has a good chance of coming down, I think a lot of the buyers that are on the side, okay, is going to jump back in the market pretty soon. Okay, so that's all I have for analyzing the URA real estate this quarter for 2024. Do you have any other observation that you think I didn't highlight over here? Do put down in the comments. I would love to discuss with you guys. Okay, so once again, if you like the content over here, do like and subscribe, and I'll see you next time.